Hello, fellow Rebel Capitals. Hope you're well. Talk about the Fed comes out and announces with kind of covertly that they may stop quantitative tightening, which begs the question, are they considering restarting quantitative easing? We're going to get into that. Also, this feud between Donald Trump and Zelenskyy is really heating up, going back and forth. I think you're going to be shocked, or maybe not, at what Zelenskyy is actually throwing back at Trump. And then we're also going to get into what on earth is propping up the United States economy. We all know for the middle class right now, the poor, the average Joe and Jane, it's getting tough. The purchasing power is decreasing. It's harder and harder to put a roof over the head, to put food on the table. But it's not showing up in the economic data. We're going to get into why in just a moment. So let's start off by going over what on earth the Fed is doing, kind of behind the scenes. We're going to go over the Fed minutes. So we're going to shoot over to Zero Hedge, and then could Zero Hedge possibly have worse ads? Like what is this? Although I do give them credit, because the first objective of an ad is to get your attention, and that it did. So anyway, the title, FOMC minutes confirm Fed pause, potentially QT taper, officials blame Trump policies for uncertainty. So this really doesn't make a lot of sense to me, because if you see what they're talking about in the Fed minutes, they're talking about the uncertainty is the tariffs may cause additional inflation. Okay, well, why on earth would you scale back QT, maybe put it on pause, if you were worried about inflation? Wouldn't you do the opposite? I'm not saying that the Fed balance sheet matters. I'm just trying to look at this through their lens, or through the narrative they try to get you to believe. Let's get back to the article. Since the last FOMC meeting on January 29th, the market has coped admirably well with the utter avalanche of headlines spewing from Washington. Gold has been the standout, that's for sure, while stocks, bonds, oil, and dollar are about flat, but with a lot of volatility. Makes things very hard for investors when you're just going sideways and it's up and down and up and down, a lot of chop. The macro data has been a nightmare with stagflationary. Well, I know Zero Hedge likes to use this term loosely, but come on. The CPI is at 3%. We've gone from 2.4 to 3. Now, I understand the CPI dramatically understates inflation. I get it. But I'm just using that CPI as a trend. And so we went from inflation to disinflation, not deflation. Prices didn't go down. They just went up at a slower rate, down to 2.4 as measured by the CPI, and we're up 60 basis points. So stagflation, I don't know. And then the unemployment rate is actually coming down. So I'm not saying it's a good economy. It's a terrible economy for the average Joe and Jane, but to call it stagflationary, yeah, not really. Let's see. Getting back to it, as growth surprises have been to the downside, while inflation surprises have soared to the upside. Again, soared. Come on. Come on. Which explains why rate cut expectations have tumbled since the last FOMC statement. And look, even by their own chart, the rate expected, look at this. They're talking about from here to here being soaring. I can't be too hard on Zero Hedge. They're one of my favorites, but they do like to embellish, let's say, slightly. And I guess for me, that's the pot calling the kettle black when you look at my thumbnails and my titles. Fed speak since the last meeting has been guarded hawkishly, with Powell reiterating his no rush to cut comments and various other Fed heads, noting the central bank in a good place after they removed optimistic inflation keeps trending down, language from their prior statement. You know, it's crazy that the market just hangs on their every word. And I talk about it just because this is a channel where we talk about what's in the news. And so, this being in the news, we're going to talk about it. It's a big deal what the Fed's doing with their balance sheet, at least from a news standpoint. From a mechanical standpoint, I don't think it matters really one way or the other. But obviously, from a psychological standpoint, it does. But you got to ask yourself, how did we get here? Like, really, how did we get to a point where our financial system is so screwed up, where our economy is so upside down that every single person out there, not every person, but every person in the financial economy for sure, and then a lot of the average Joes and Janes are just hanging on every word Jerome Powell says as though it's going to mechanically move the market and, more importantly, the broader economy. I mean, I always go back to one of the first conversations I had with Jeff Snyder, and I asked him what would be his definition of success, as far as what would you need to see happening in the real economy to know that we're really making improvements. And he said for no one to know the name of the Fed chair. And you think to yourself, oh my gosh, that's so unrealistic. That's never going to happen. But if you just go back in time, I mean, just go back to the 1940s, 1950s, 1960s. Nobody knew who the hell was running the Federal Reserve. That was not a household name. And it wasn't even a household name in the financial media. How do I know this? Because, as you guys know, one of my hobbies is to go back and read headlines and articles from the Wall Street Journal going back to the 1940s and even back further. And I remember in the 1940s, I chose the 1940s specifically because supposedly that's when the Fed was doing all this yield curve control and buying all these bonds, and they were really proactive, let's say, in the markets. And I go through Wall Street Journal after Wall Street Journal after Wall Street Journal in the 1940s, and I can't find a mention of not just the Fed chair, but the Federal Reserve, period. Now, I'm sure if I really scrutinized it, I could find it here and there. But nowadays, I mean, you go through a Wall Street Journal, and every other word, for heaven's sakes, is Federal Reserve, or at least every other article, right? I mean, I go through Bloomberg, and they have a whole section, they have a whole tab for central banks. But the point was, back in the day, that was not a thing. And even prior to the 1970s, people that knew about the Fed, they thought they were a joke. They didn't think they had any power. They didn't pay any attention to them. So again, how did we go from that to where we are today? And ask yourself, was the economy more sound? And I'm not saying the 70s with the inflation and everything, but prior to the 1970s, was the economy more sound then than it is today? I would argue absolutely. If you consider a sound economy being one where the focus is on producing goods and services, as opposed to the focus just being on number go up with fart coin, which is where we are today. So let's start a movement. It's not just end the Fed. Let's forget the Fed. Getting back to the article. Here are the initial highlights. Fed's on hold confirmation. Zero Hedge points out the Fed's 19 officials who participate in the interest rate decision indicate they want to see further progress on inflation before making any further cuts. Okay, then why are you contemplating the pause on QT? I thought that through the Fed, you're reducing liquidity, and supposedly that's going to help drive down the inflation rate. Fed blames Trump. The minutes also cited high degree of uncertainty surrounding the economy, which made it appropriate for the Fed to take a careful approach in considering any further changes to key interest rates. Fed officials said Donald Trump's proposed tariffs mass deportations of migrants, as well as strong consumer spending were all factors that could push inflation higher. Okay, then why aren't you raising rates? Like, it doesn't, there's so many contradictions. And it's one of the things that I've pounded the table on since starting this channel in 2021. It's like when the central planners tell you something that doesn't make sense, you've got to dig into what they're saying and you've got to scrutinize it with a high degree of skepticism. And usually when something doesn't make sense, it's because they're lying. It's because they're lying. At least that's been my experience going back to 2020. I mean, almost every single time it doesn't pass the sniff test, then it's because they're lying or they're trying to push some sort of narrative. In other words, just push some sort of propaganda. Monetary policy. Some participants cited potential changes in trade and immigration policies as having potential for hinder disinflation process. Okay. Vast majority of participants judge risk to dual mandate objectives were roughly in balance. A couple of participants noted it appears risk achieving inflation mandate were greater than risks to unemployment or to employment mandate. Majority of participants observed that the current high degree of uncertainty made it appropriate for community to take a careful approach in considering adjustments to the monetary policy. Okay, let's look at the balance sheet here. That's what I'm more focused on. Various participants noted it may be appropriate to consider pausing or slowing balance sheet runoff. Why? Why? If the risk is to the upside with inflation, then you should be accelerating the balance sheet runoff. Again, looking at it through their that's not my view, but looking at it through their framework. Right? Again, I don't think their balance sheet really matters mechanically, but to them, they would argue that it absolutely does. And that if they're increasing QE, then why are they doing that? In their words, or in their view, it's to lower interest rates, to increase liquidity, to stoke inflation. You know, what were they doing when they were trying to get the inflation rate up to 2%? Well, they're trying to do that not that long ago. Remember, that was the problem? Deflation. What were they doing? They dropped rates down to zero, and they were doing quantitative easing to try to get the inflation rate up to their 2% target. Remember those days? Okay, so if you're trying to get inflation down, and if that's the risk because of all these tariffs, wouldn't you do the opposite of QE, which is QT? Or would you pause that? Again, see how they're contradicting themselves within their own statement, within their own minutes. And to me, that doesn't pass the sniff test. And that tells me they are lying. Reserves might decline quickly upon resolution of the debt limit, and at the current pace of the balance sheet runoff might potentially reach levels below those viewed by committee as appropriate. Gosh. All right, let me explain this to you guys. This drives me crazy, but just let me explain to you what they're talking about here. Let me pull up a chart of the bank reserves in the system, and then I'm going to explain why this is just complete and total nonsense and hubris, really. So here's what they're talking about. They're talking about the debt ceiling. So let's see if I've got the TGA. I don't, but so you guys know this from watching my videos. The TGA is a component of the liability side of the Fed's balance sheet. That's Janet Yellen, or now Scott Bessent's checking account, the Treasury. So if they're getting to the point where they're hitting a debt ceiling, right, then that means they're not able to issue as much debt as they would like. Okay, well, that means that they can't spend as much money as they would like, right? And therefore, what they're doing is there aren't the same amount excuse me, the same amount of bank reserves going out of the TGA into the reserve accounts for the banks. Because remember, there's three major components of the liability side of the Fed's balance sheet: the bank reserve accounts for the mega banks, let's say, the TGA, and reverse repo. So reverse repo is almost drained. That means no more, let's just say, bank reserves going from reverse repo into the accounts of the mega banks. And if we get to a point where there's fewer reserves coming out of the TGA, then that means there's fewer reserves going into the accounts of the mega banks. And while they're doing QT, all else being equal, that is going to shrink the amount of the reserves because you don't have the TGA liquidity or the reverse repo coming out of the account to offset what's happening with QT. So you see right here that from December 22 up to today's date, the net increase, or there is a net increase in bank reserves. But if you looked at the Fed's balance sheet, they would have done massive amounts of QT, you see, from here all the way to here. And why I mean massive amounts? I'm talking about, I mean, we're at 6.8. We're looking at over 2 trillion. Over 2 trillion of QT, but yet the amount of reserves in the system has actually increased slightly. How is that possible? Because those reserves were more, the reserves that were coming out of the TGA and the reverse repo were more than offsetting the decline of the reserves due to quantitative tightening. So this is what the Fed is referring to. Now, getting back to the amount of bank reserves and the hubris and this, why this is just total nonsense, is because look at how many reserves were in the, I mean, I point this out all the time, but look, there were no reserves in the system prior to QE, no reserves. So in other words, the whole entire global monetary system was functioning without any, or effectively without any reserves. Okay. So now all of a sudden you're going to say that, oh my gosh, 3.2 trillion just isn't enough. How do you figure? And even if you want to say, okay, well, George, it's QE times, abundant reserves, it's a lot different now. I would argue, no, it's not. But even if you want to have that rebuttal, fine. Look at when we had a problem with the system. That was September 2019. And at that point, the reserves were 1.5 trillion. Now, I would argue the repo blowup was not a result of lower bank reserves. But even if that is your argument, fine. We've still got a delta of 1.7 trillion. And you Fed officials are telling me that you're so smart that you know for sure, based on all your models that we know are incredibly, incredibly accurate, that at 3.2 trillion, we're getting real close to that moment when the monetary system just isn't going to have enough bank reserves, which they don't really need to begin with. And the reason I get so frustrated with that is because it's just the Fed trying to dupe you into believing they have all of this power. It's the Wizard of Oz just trying to pull the wool over your eyes because they think that you're going to believe that they're not just this little teeny guy that's just moving this lever here and there. That you believe that they're this all-powering, let's go with that word, a little easier to say, that they're this all-powering individual or entity that can really just whatever they say, whatever they do is going to impact the economy, and they control the GDP. They control interest rates. They control liquidity. They control the dollar. They control all this. They control the unemployment rate. Blah, 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 blah. When in reality, they're just this pipsqueak. Reality, they're just the Wizard of Oz behind the curtain. And it's all a giant psyop to get you to believe something that will prompt you to take the action they want you to take. They're manipulating you. They're manipulating the citizens. They're manipulating the financial market. They're manipulating the average Joe and Jane. They know they're doing it. They know that these psyops are their only real power because they actually state it. If you want to really get into the nitty-gritty with the Fed minutes and what they say, you go back to the 1980s, and they openly admit this stuff. And that's what frustrates me. It's like, can we get to a point now where we just call a spade a spade? Can we get to a point where we just end the ruse here? And we're all going to be better off for it. Just get rid of the damn Fed, get rid of their stupid psyops, get rid of Jerome Powell. And what I've got a novel idea. A lot of people would say, oh my gosh, well, what would replace the Fed? I know. How about market interest rates? Well, how about we let the market set the front end of the curve? How about we let the market set interest rates? What a novel idea. You don't think the market could set better interest rates than the Fed? And then if interest rates go up, they go down. Fine. That's what the market is doing. And they're doing it for a reason. You know what's bananas to me is every single economist out there, whether they're Keynesians, Austrians, monetarists, it doesn't matter. They all have one thing in common. And they all say that price controls are bad. Even Krugman, price controls are bad. But yet somehow all of them say that if we have this central planner that's setting the price of money, interest rates at the front of the, well, then that's not only good, that's absolutely mandatory. We have to have that. You know, sure, we want the price signal in the real economy, and we want price discovery, and we want all these things, and we want the market to set prices there. But heaven forbid we have that with the cost of money or credit or debt. I mean, come on. Again, can't you see them contradicting themselves? And when they contradict themselves, that's when you know it's lies. That's when you know it's propaganda. Okay. Honestly, I should read this whole article, but I'm not. It just gets my blood pressure too high to even talk about this nonsense. So let's go over to what's happening with Trump and Zelenskyy. And if you haven't followed this, Trump met with Russia, which, Europe gets all upset and Zelenskyy gets all upset. And what's weird is I don't know how you would argue that's a bad thing, that they're actually trying to figure out a plan that would lead to peace. It's just what's so bizarre is the left that used to be anti-war. I don't know what happened to that. They turned into the party of warmongers. And now all of a sudden, the Republicans are the party of peace. It's just this crazy shift. But when you see what Trump said and how they spin it and what he actually did, you see that, again, it's the same thing. It just doesn't pass the sniff test. And one thing I said on Twitter the other day that I will reiterate on this video, I think it's absolutely true, is if you want to know the secret to determining who is spreading misinformation or disinformation, all you have to do is look at the degree to which a person is accusing others of spreading misinformation and disinformation. And that's how you know who the real culprit is. Like Barnes, my good buddy Robert Barnes, he always says that it's admission through projection. So my point there is, if you see someone saying, oh, misinformation, disinformation, malinformation, we need more censorship, you know definitively, without a doubt, that they are the ones that are truly spreading the misinformation and the disinformation. Getting back to this, Zelenskyy hits back at Trump's comments, says Ukraine is not for sale. Oh, the irony. Oh, the irony. And it's not just with misinformation and disinformation. what I have found in my life, that admission through projection applies on so many levels. And look, you have your own opinion on Russia, Ukraine, whatever it is. But for Zelensky to come out and say Ukraine isn't for sale, my first instinct is, okay, maybe, just maybe, that is some admission through projection. Or maybe said a better way, another way, admission through accusation. I'll have to write that one down. Admission through accusation. So Ukrainian President Zelensky hit back on Trump that Ukraine started its war over Russia, saying that America, I think that, I mean, I want to give Trump a little bit of leeway there. I don't think he was really implying that it was all Ukraine's fault. I think he was, Trump, he overgeneralizes all the time. But I think he was more so saying it was about NATO and, Ukraine coming into NATO, which, again, regardless of what side you're on in this debate, you can't say that didn't have anything to do with it. And he says, this is Zelensky, that American president is trapped in a disinformation bubble. Admission through accusation. And adding that his country was not for sale. Yeah. The president added his Ukrainian counterpart approval rating at 4%. I have no idea how Trump got that. Again, it could be him just spitting something out just without researching it right at the top of his head, or he could just be, some little poll over here said 4%, and he's just restating that. The CNBC, which is going to be heavily biased in favor of Zelensky, all mainstream medias, they state that an opinion poll by Kyiv International Institute, who's running that? I'd guess Zelensky, showing that 57% of Ukrainians trust Zelensky. Fantastic. Then it just goes back to what Trump was saying, then just hold elections. Right? I mean, that was one of his key talking points. Trump was, hey, just hold an election, for heaven's sakes. And I think it's interesting. It tells you a lot about what's going on behind the scenes, that CNBC doesn't really want to address that. They want to kind of sweep that one under the rug. As we are talking about in the Zelensky quote here, 4%, we have seen this disinformation. We understand it's coming from Russia. Okay, fine. But again, what my rebuttal to Zelensky would be, dude, if you're that popular, I mean, 57%, then just hold an election. Why not? Is it? I don't understand. And another thing that doesn't pass the sniff test is now I see all these pictures of Zelensky, and he's out there, getting off his, Boeing 737 or whatever it is, and he's doing all these things. And I was thinking to myself, what happened to the days when he was just like hunkered down in like a military bunker? Remember that? This is a couple years ago at the beginning of the war. He was just, every single picture of him or every single video, he had this, he had that army garb on at all times. And he was just, in this military bunker that he just couldn't leave. Why are you, what happened? Why is it now so safe? Like, you're still at war. Last time I checked. What happened to the military bunker? Why is it unneeded now? Or was that just all a ruse? Or was that just all PR? He added that any attempts to replace him during the war would fail. Okay, again, just it's simple to get to the bottom of it. Just holding a damn election. I'm very curious as to the people who are on Zelensky's side, how they would argue that he shouldn't hold elections. Like, I get what they'll say. They'll say is that, oh, well, George, this is just standard practice to institute martial law during a war. Okay, it's standard practice. That doesn't mean it's right. And if he isn't hunkered down in the military bunker anymore, I assume that would imply that people can actually go out and vote. So let the people vote. And if we're trying to stand up for democracy, if that's what's at stake here, don't you think we should have some, I don't know, democratic elections? So, another quote: the army is quite resilient, and it is the most resilient in Europe, and it guarantees us the opportunity to speak with dignity and on equal footing with our partners. Okay, I think what he's talking, I mean, he's kind of like whining that he didn't get invited to the party as far as Trump talking to Russia about maybe a path forward. Okay. You didn't get invited, man. I mean, get over it. Maybe it was right, maybe it was wrong. So what? Whatever they said, how about you actually try to move forward in a way that's going to be a win-win for both parties, if that's possible. But let's remember that the objective here, I would hope, for all parties involved, is peace, so we don't keep killing just people nonsensically. And by the way, going back to the misinformation, remember when the war first came out? Remember that Putin had dementia? Remember that one? Or remember that we have to start nuclear war, because if we don't, then Russia is just going to take over Ukraine, and then they're going to take over Europe, and then they're going to take over Asia, and then they're just going to take over the whole world, because Putin is this megalomaniac and yada, yada, yada. Now, I agree. He's definitely a megalomaniac. There's no doubt about that. You know, it's not like I like Putin, for heaven's sakes. You know, I don't like dictators. I don't like central planners. I don't like authoritarians. I don't like federal governments, regardless of really who's running them. But why are we not looking at the situation as it is today, and then going back to all those people that were saying that Putin has dementia? I mean, regardless of what you think of Putin, you can't say that he's got dementia. I mean, come on, right? And regardless of what you think of what's going on there, you can't say that there's a realistic probability or a high probability that if we do have peace in Ukraine, that he's just going to invade Turkey next, and then he's going to go down and take over all of Africa, and then he's going, I mean, we've got to admit that the probability there is incredibly low, and that it was massively overblown by whom? That would be the media that was accusing all of you watching this video of spreading misinformation and disinformation. So the reaction from Russia, as you can tell, or you can guess, probably pretty positive. They're talking about the fact that Trump is the first president to even mention that NATO and Ukraine coming together could have something to do with the motivation for Putin invading to begin with. In doing so, the president echoed the criticism of Putin, who has ruled Russia for all but for the past 25 years. Yeah, so look, I'm not here to claim that Putin's some, as pure as the driven snow. And if he's the one calling for democratic elections, it's like, Putin, okay, how about you do the same thing? And sure, you have elections, but it's elections that are democratic. It's the whole wink wink thing. It's as democratic as Maduro's elections were in Venezuela. So look, they're all as crooked as a scenic railway. They're all sociopaths. They're all megalomaniacs, all of them. Putin, Zelensky, every single one of them. And I'm in favor of the people. And that's what's unfortunate here. Is that at the end of the day, Zelensky doesn't suffer. He becomes a billionaire. Putin doesn't suffer. He's a billionaire 1,000 times over. Who knows? Who really suffers? It's the people of Ukraine and the people of Russia. Both of them. That's what's sad. And that's why any effort to stop this, I think, on net balance, is a positive. Okay, now let's get over to what is actually propping up the United States economy. And I want to start. I just had a conversation with Greg Manarino. Fantastic conversation. And one of the highlights, and you guys will post that tomorrow on the interview channel. So if you guys aren't subscribed to that, definitely go check out Rebel Capital's interviews. That's the new channel that we set up where I'm doing interviews 2-3 times per week. But one of the main highlights, I think, was Greg talking about how the American people, the average Joe and Jane, how they are dependent on the current structure of the economy, how they are dependent on the current structure of the fundamentally unsound American economy. Let me add some description in there. And that if you look at the United States economy, you ask yourself, what is propping it up? Because if you zoom out, you may think, oh, well, George, that's because we have an awesome economy and we have entrepreneurs and we do all these things. Okay, fine. But let's just go back to 2019. And if I told you that the central planners were going to lock everyone in a cage for 2 years, they wouldn't let you out to work unless you were, quote unquote, essential. Who determines that? And we are going to shut down the entire economy. We're going to shut down the entire global economy. We're not going to let you take your dog out for a walk. We're not going to allow you to open up your business. We're going to force you to close your business indefinitely. We're not going to allow you to take your kids to school. We're basically going to put you in a jail cell. And in addition to that, we're just going to give everyone, quote unquote, free money. And if I told you back in 2019 that this was going to happen, what would be your prediction for the economy? Would you say, oh my gosh, we will definitely not have a recession? Oh my gosh, we'll probably have an economic boom. Oh my gosh, yeah, that sounds like a fantastic economic policy. No, every single one of you watching this video would have said that is going to lead to Mad Max. Now, I don't know if it's going to be an inflationary depression, recession, or deflationary, but the stuff is going to properly hit the fan like we have never seen before. You can't just shut down an economy, for heaven's sakes. So, as you guys know, that's exactly what we did. And somehow we haven't had that recession. We haven't had that Mad Max type scenario. Why? Is it because maybe we were all wrong and maybe the Keynesians were all right? Is it because the only economic pain that we had to go through was just the CPI going up to 9%? And that was just broadly distributed through all 330 million Americans? Or was it because our economy became even more distorted than it was before at the expense of the poor and middle class, the average Joe and Jane, and that kicking the can down the road will eventually lead to an even bigger crash, let's say, than we otherwise would have had. And maybe, just maybe, that crash doesn't happen all at once. Maybe that crash is like Japan, where it's just death by 1,000 cuts, to the point where most of the normies don't even notice it. They just wake up 20 years later and they're like, damn, how did I get so poor? I used to be able to make ends meet. My wife used to be able to stay home and watch the kids, or one parent, whatever your situation is. You know, we used to only need one income. Now we need 3, 4. Now we need the kids to work. Now we need the dog to work. Or maybe we need some sort of miracle. We need to just bet the ranch on fart coin and just keep our fingers crossed, because that's the only speculation, gambling. That's the only way that we are going to even maintain our purchasing power. See, that's would be an example of death by 1,000 cuts. I don't know how it plays out. Who knows? Right? But what I do know is you can't shut down an economy and not pay the price. It's got to come out somewhere. And the Keynesian stimulus and all this stuff, sure, it papers over the problem, but it doesn't eliminate the problem. It exacerbates the problem. So let's look, and if you want proof, here you go. All I want you guys to do is a very quick, simple thought experiment. You just look at where the S&P 500 is today. At, let's just say 6,000. There's a log chart here, so it's kind of, there we go. So let's just assume for a moment, nothing drastic, nothing major. Let's just assume that the stock market, S&P 500, goes back down to the level it was, I don't know, let's just say in 2015. I mean, that wouldn't be that bad, right? 2,700, but that would mean the stock market gets cut in half. And by the way, if we're just looking at fundamentals, that would take us down to just the average PE ratio. If we're looking at the CAPE ratio, the Shiller was that cyclically adjusted PE ratio. So right now we're right around 38. I just did a video on this, and that in historic average is right around 17. So if we go down, let's just assume, I mean, obviously I'm oversimplifying here, but that would take us down, let's just say 50%. And at that level, the stock market, based on historic standard, would just be priced fairly. Fairly. It wouldn't be super, super cheap. It'd just be fairly priced. Use the Buffett indicator, same exact thing. So you can sit here and say, oh my gosh, George, you're bearish and blah, 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 blah. No, I'm not. I'm just pointing out, this is just reality. It's just numbers. If the market went down to its historic fair value, that's where it would be. But that's not debatable. Right? So then just ask yourself, if that were, I'm not saying it's going to happen, but if that were to happen, what would the purchasing power for society at large, what would aggregate demand do? It would not just contract, it would contract massively. And if you don't believe me, just look at what happened during the GFC. Most of you lived through that. Stock market went down by 50%. Housing market went down by 50%. What happened to the aggregate purchasing power? What happened to the economy? What happened to aggregate demand? I mean, the younger people might not remember back that far, but most of the adults watching this video probably remember it like it was yesterday. What happened to the restaurants? They were vacant. 2009, 2010. And I remember when I retired in 2012, I put up an ad for just some handymen, to help me with some remodels with some of my properties. And I remember I put that up on Craigslist in Kansas City, Missouri, and within an hour, I probably had 100 resumes. Right? That's how bad it was back then. The no one in the movie theaters, no one buying cars. No, I mean, it was
Also, George, your camera just shut off.
Okay, so let me switch it up real quick here. And then Josh, when this is uploaded, just go ahead and cut this part out, please. Let's see. Cameras. All right, we'll fix this in 2 seconds, guys. Just bear with me. There we go. All right, so we'll just bring this back around. Boom. All right, we're just going to use the computer. I think the SD card just ran out of space. Okay, so getting back into it, let's look at a chart of housing prices. And we can see that, again, I'm not saying that housing prices are going to crash. I'm not saying that. You just look at the price to income ratio as an example. You just look at the inflation adjusted price as an example. And you can see that we are not just at all-time highs, we are at nosebleed levels. We are way higher than we were during 2006. So again, this is not to say that home prices are coming down. It might go up, but it doesn't mean that there's it doesn't mean, I was thinking about what Chris calls it yesterday. I won't go into that depth, but it doesn't mean that they're not at obscene levels right now. And it doesn't mean that they're wildly expensive. And it doesn't mean that there isn't therefore a tremendous amount of downside risk. Again, we could go up 20% in 2025. That could happen forever. But it doesn't mean that home prices are at a level that is even remotely close to a historic norm when you look at the price to income. That's the key. Because at the end of the day, what should drive home prices? Well, incomes. That's how you pay your mortgage. And if real incomes aren't accelerating, but home prices are, then something is off. And the higher that delta goes, the bigger the spread. It's just the bigger the risk. But it just doesn't necessarily mean that the prices come down. Again, it's like I said yesterday. We've got a big dam right here. And I can point out crack here. There's a crack over there. There's a crack over there. Are those cracks there? Absolutely. I don't think anyone would debate that the cracks are actually there. Now, does that mean that the dam is going to burst? Maybe, maybe not. I don't know. But just because the dam hasn't burst yet, it doesn't mean the cracks don't matter. If you want to argue those cracks don't matter, then you have what I call the ostrich investment strategy. You just bury your head in the sand and pretend that it'll all go away and it'll all be fine at the end of the day. Personally, that's not the strategy. That's not the approach that I like to take. But if you want to really get your head around what has propped up the economy, you got to start with asset prices. And then you just got to ask yourself if that's sustainable. And then you also have to ask yourself what that does to the real economy, even if you're able to avoid a recession or an economic contraction due to asset prices going up. Just ask yourself what that does to the real economy. And remember that the definition of wealth is not how much money you have. It's not your income. It's not how much gold or silver you have. It's not what your stock portfolio reads. It's simply how many goods and services you have access to. So just ask yourself, by our economy being completely upside down to where asset prices drive the economy, is that creating an environment where there are more goods and services being produced? Or even us having access to more goods and services? And if the answer is no, then by definition, we are not getting more wealthy, regardless of number go up on the S&P 500 or your house. That's what we have to remember. All right, guys, on that bombshell, enjoy the rest of your afternoon. Like I always say with these videos, especially the whiteboards, I'm not trying to predict X, Y, or Z. I'm simply trying to get people to think. That's it. You can agree with me. You can disagree with me. It doesn't matter. We all are entitled to our own opinion. Just so long as if at the end of one of these videos, I get you to think about maybe just a couple things that I said, for me, that's a win. For me, that's pretty much my definition of success. So on that note, guys, always stand up for freedom, liberty, free market capitalism. We'll see you in the next video.